Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to this beautiful, amazing YouTube channel and welcome to Audit Booster course. Yes, guys, this booster course means what? In 10 days, we are going to cover entire audit from our magic book. Okay, so if you have ordered on time, maybe you have got already the magic book. From this, we are going to complete entire audit in just 10 days. Okay, every day we will have one lecture of 3 hours each, and okay, we'll complete in the nicest way entire audit. So what is the intention? Every student will have different intention for joining this batch. Maybe some would join to get 70, 80. Already their confidence is good. Okay, then you focus more on learning. Okay, your concepts are amazingly strong, so focus in the class. Everything is learned in the lecture itself. Many are new, sir, I have not done few chapters, I don't have confidence in few chapters. Then you focus accordingly. Stage 1 should be understand in detail and also learn, and second stage, maybe when you read at home, you will learn even better. Okay, so you have to decide what your intention is. Okay, you have to decide what your aim for this batch is, and then accordingly adjust the target. I hope it is clear. Every day, whoever has enrolled, okay, we will give you targets every day, that this is what we plan to do, we intend to do. Okay, just walking like that on a road will not give you fetch us anywhere. So we should be very clear what our target is, what our goal is, so accordingly we can reach our destination, that is getting 70 or 80 in audit. I hope it is clear. Okay, any other doubts? I don't think you will have, because let us start right away, only then result will come. Very nicely we'll study, no time pass, nothing we will do, because time is very less for this batch. Okay, so can we start? Are you ready, guys? Can we start? Just type R means we will start. R means we can start. Yes, chalo, let us start right away. Okay, make sure you attend all lectures, only then confidence will increase. Okay, so every lecture, whatever happens, remember one thing: if you revise at home, it is definitely going to take more time. Here, if you revise once with us, time will be drastically less when you revise second time at home. Okay, so this will be like true booster for your preparations. Let's start. Today our target is chapter number 1 fully. After that, if your mood is good, my mood is good, we will also proceed with chapter 11 essay 210. So let us start right away. Okay, so first let's come to our magic book itself. Okay, start. So first we have to discuss two words in very much detail. Okay, if you understand these two terms, only then we can understand entire audit, and those two terms are definition and objective of audit. One more time, definition and objective. So it might take little more time, you will feel again and again I am repeating, because these are the base. Okay, if you don't understand that, no use understanding entire book. So we'll go little in detail only in two things: definition and objective. Let us start. Only relevant for exam we will discuss, because exams are just coming very soon. Definition of audit: audit is independent examination of what? Financial information of what? Any entity, whether profit oriented or not, irrespective of size or a legal form. When such an examination is done with a view of expressing an opinion thereon. Nothing understood. Let us start. Number one, independent examination. Understand word number one. What do you mean by the word independent? Auditor should be nowhere related to the company. Independence actually has deeper meaning. We will study in chapter 11. But as of now, there is independence of mind, independence of appearance. What is independence of appearance? Clearly, it should appear that he is nowhere related to the company. Let's take simple example. If I do, we have a 3-star hotel of my dad. If I do audit of my dad, tell me what will happen. Of course, I will be little biased, because he is my dad. You have to understand. For example, my dad has done a small fraud of GST of 3 crore. I will tell dad we need to disclose this. Dad will tell, are you mad? I am your dad. I said, but we have to be independent in CA course. Okay, we have been taught first line. Arey, first CA course came or you came? I said, first I came. And who gave birth? Me. So behave properly. Okay, that is why, understand, I will be little biased. So auditor should be independent. For independence, there are thousands of rules in Companies Act, that we cannot hold shares of the company. I should not be related to the company. My director should not be relative of the company. My wife cannot hold the share. Lots of rules are there. So that is independence of appearance. But that is one part. Through appearance, I could be independent, but I should be independent from mind also. Are you clear? Sometimes from appearance, I am completely independent. I have no relation with company, but from mind, I am little biased. Sir, why you are biased? Because I might not get audit next time. Understand, I want to do audit next time also. Okay, so for example, in Reliance, I find out 5 query. Okay, in debtors there is query, in creditor there is query, here it is query, there it is query, 4 queries. Then Reliance will tell me, if you show so many queries, we will not give you audit next time. From appearance, I'm independent, but from mind, I will become little biased. So independence is a big thing. Understand, there are 50 lakh people who invest in Reliance. 1 crore people who invest in Reliance. How they invest? They have never visited Jamnagar factory of Reliance. They have never gone to Mukesh Ambani's Antila house, but still they invest because they see audited financial statement. That is the trust of auditor. They believe that anyone and everyone in the world can do wrong, but one person will never do wrong, and that is auditor of the company. So why is everyone investing? Understand, because of one person, and that is the auditor. I hope that is clear. I hope that is clear. Yes, sir. Super duper clear. So based on charter accountant, everyone invests based on a CA report, okay, certified report. We believe that he has studied all the rules, regulations, standards on auditing, accounting standards, schedule 3. So he will never show anything wrong, and that is why I invest. And why that report is very important? Because it's of an independent person. Clearly, first line is report of an independent auditor. So I have explained you how many words? Only one word. What is audit? It's an independent examination. What's examination? Checking. Now what I will check? Okay, will I check dress? Arey, this girl is looking very pretty in office today. No. Arey yaar, this Manoj to came very late today. No. Arey, this employee to not working only. Since half an hour he is sitting here. No. Arey, the CEO today sleeping. Arey yaar, very bad company was. No. Then what will you check, sir? I will check only one thing, only one thing, only one thing. Financial information. Financial information means what, sir? Can you briefly explain? Very briefly we will go. Books of accounts and financial statement on which books of accounts are prepared. Here. So financial statement has two things. Books of accounts, and based on books of accounts, what I prepare? Financial statement, both things. I will check only books of accounts and financial statement prepared based on books of accounts. Now you will tell me, in financial statement what will come? 5 things. Balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. I hope you know this. Okay. So I will not check everything. I will just check financial information of which entity, any entity. Not compulsory, only companies audit will be done. Any entity, whether it's profit oriented, TCS, or not means lost company also I can check. Paytm karo. Okay, Zomato I can check. Okay, Paytm I can check. Policy Bazaar. So whether profit oriented or not, irrespective of size or legal form, be it any size, be it a world class company of $2 billion or maybe 2000 crore company, any company, irrespective of size. What is legal form, sir? Legal form means what? In India, there are several forms of company or several forms of organization: sole proprietor, partnership, HUF, LLP, company. Everyone's audit will be done. I hope it is clear, irrespective of size or legal form. When such an examination is done, why do I do checking? When such an examination is done, why? To express an opinion. This word I will explain later. Express an opinion word I will explain later. Are you clear? Later means just after 5 minutes. I hope it is clear. So till you're fully clear, you don't have to learn definition, but still we will try to learn. What is audit? Audit is independent examination of what? Financial information. Of what? Any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination is done, why? With a view of expressing an opinion thereon. Shall I repeat one more time or clear? Clear. Sir, one more time repeat. But what is audit? Audit is an independent examination of what? Financial information. Of whose? Any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination is done, why? With a view of expressing an opinion. Why do I check financial information? Just for one intention, so I can express an opinion. Now I have to discuss one more part and then we move on to the chapter. This is the base. Okay, come here. What are objectives of audit? My second question. What's the objective? Why am I doing audit? So as per SA 200, okay, 200 standard on auditing. What is 200? Overall objective of independent auditor. How to remember? In 200 also double O is there, 00. Here also O. Wow, amazing. As per SA 200, overall objectives of independent auditor are two. Number one objective, to obtain reasonable assurance that the financial statement are free from material misstatement and are prepared as per FRF. That is not written here, but still, okay. And second, to report on financial statement and communicate as per standard on auditing. This will take lot of time, so listen very nicely. Whatever is happening, control. Start. Tell me, what's the first objective? To obtain reasonable assurance. Come here. Start. To obtain reasonable assurance that the financial statement are free from material misstatement and are prepared as per FRF. Okay. So we start from last line. Financial statements are prepared as per FRF is there in the book minimum 600 times. Now you will tell me what is FRF then? 600 times this is written, but what is the meaning of this? Can you tell me? Definitely I will tell. FRF basically means what? Financial Reporting Framework. Whenever you don't understand the word, break it into 4-5 parts. What is applicable? Applicable means whatever is applicable. Are you clear? Whichever rules. Applicable FR. What is financial reporting? There are two things in finance: preparation and presentation. So reporting is basically presenting the financial statement. In CA final, name of accounts is what? Financial reporting. So it should be as per a framework. Reporting means presenting financial statement. How to present? Okay, what dress to wear? It should be as per the occasion. Okay, for example, if Raksha Bandhan is there, I will wear traditional. If I am going to prom night or party, I will wear what? Western. Okay, if I am going on a date, maybe I will wear one piece. So whatever dress you wear, okay, it should be as per the framework. So simple. We want financial statement to be free from material misstatement and as per FRF. What is FRF? FRF is basically financial reporting framework is rules and regulations which are applicable to preparation and presentation of financial statement. Framework means rules, regulation, policies, procedure which govern preparation and presentation of financial statement. In India, financial statements are prepared as per what? Schedule 3, because it's a framework given by Companies Act. Okay. Sir, who will decide the framework? It is decided based on two things: nature of the business and rules applicable to the business. What is the simple meaning of framework? Okay, framework means laws, rules, regulation, policies, procedure. Who will decide this? It's dependent on nature of business and rules applicable to that business. Example, all companies in India have to compulsory follow Schedule 3 and accounting standard. So that's a framework. I have to check whether they have followed Schedule 3, whether they have followed accounting standards. Simple. Let me read, you'll understand better. See here. Financial reporting is preparation and presentation of financial statement. How to prepare and present, it depends on nature of business and rules applicable to the business. Moving on, framework is basically policies, procedure, rules, regulation which help in preparation and presentation of financial statement. Okay, example, as per section 129, all companies have to follow what? Schedule 3 and accounting standard. Simple, simple, easy, nothing great. Okay, so if you want to wind up in 1 second, what is FRF? FRF basically means how to prepare and present financial statement. It depends on nature of business and rules applicable. For example, insurance company have to follow IRDA Act, banking company have to follow Banking Regulation Act. All other companies as per section 132 have to follow schedule 3 and accounting standard. Understood, sir. Now come back to where we were. Number one, whether financial statements are prepared as per FRF, that you need to check, and they are free from material misstatement. Very important word, very crucial word. They are not writing misstatement, guys. Understand what they are writing. Material misstatement. Okay. Now to understand, first let's understand misstatement. What is misstate? Today is a Thursday. Wrong, because today is Monday. Misstate, I spoke wrongly. To state means what? To assert, to tell. Today is Monday. I told. But what is misstate? Telling something wrong. Okay. But wrong things are allowed. Auditor, wrong things are allowed, but it should not be materially wrong. Materially wrong. Now you will say, what is material? It's a what? Subjective decision. Materiality is anything which can influence decision of user, which can change your decision. That is material, but it's very difficult. So that is why as per SA 320, which we'll study at relevant time, okay, materiality is defined. Simple words from now on. Always remember, materiality is what? 1% of sale. So anything, if your sale is 100 crore, any mistake above 1 crore, it is material. Misstatement means basically mistake. But which mistakes are material? More than 1% of sale as of now. When we understand SA 320, we will understand in detail. We don't have to find misstatement. Absolutely wrong. Wrong, wrong, wrong. We have to find material misstatement. See, judgment is understood. Judgment is when you did not know audit. Now you are champions in audit. So you should know which judgment is material. Of course, it's a subjective decision, but anything which is more than 1% of sale has to be material. Super clear. Come here now. What is misstatement? Come here. This will not come in exam, but if you don't know this, what's the use? Come here. Here. Misstatement is difference between cap, classification, amount, presentation and disclosure of a reported financial statement item, and classification, amount, presentation and disclosure required as per FRF. Not understood. See, misstatement is difference between classification, amount, presentation, disclosure of any item, and classification, amount, presentation, disclosure required as per law. Simple. It's the difference between, I have written this answer, but ICI, that is applicable FRF, ICI tells our suggested answer is this. So what's the difference? Misstatement. Do we have to identify misstatement? No. Material misstatement. Our financial statement should be free from material mistake. Now let me understand, mistake can be of 4 types. It's the difference between classification is wrong. Can you tell one example? Why not? Very simple. For example, you purchased a land. Why you purchased? For investment purpose. Next year airport will come, so price will increase. Okay. So if it's an investment for 1 year, it should come in current investment. But you took in land and building. Now what I will assume, that company is doing jabardast growth. Company is going to expand 2x, 3x, 4x, 5x. Okay, because they have purchased land. Maybe they will set up new factory and turnover will be this much. Because they wrote in land and building, they should write this in land in investment. Classification is wrong. Are you clear? Simple. That's a mistake. It's a material mistake. You have to identify. So after identifying what to do, that I will tell. I hope you understood. For example, if you are walking with your friend, what will others assume? She is your girlfriend. Then directly in class second day, we are to just friends. But classification is wrong. Friends don't hold hands. Who told? I and my girlfriend to hold, but she is my friend only. Only you can hold your family very much forward. We are still in India, but forget that is not the case. Classification. Second example. Okay. For example, scrap sale you took as normal sale. This year sale, last year 50, this year 500. Now you are companies grow 10 times. How can you increase sale 10 times? And then we realize you sold a few assets. You sold assets of 475 crore, but you took it in sale. Crazy kiya re? Are you mad? Your sales reduced from 50 to 25 crore, but sale of asset means you will close down company. That also you took in sale. Are you clear? It is dash is wrong. Classification. Second, amount also could be wrong. For example, 100 crore purchase, you added 10, 1000 crore. Now your loss has increased by 900 crore. In 10 you added by mistake. So understand, misstatement could be of two types. If you do it intentionally, fraud. If you do unintentionally, error. I hope clear. Misstatement are of two types: intentionally fraud, unintentionally error. So misstatement is difference between classification, amount. What is the third word? Presentation is wrong. Now you will tell me what is wrong presentation, sir. Debtors. I did not show net. In India, net debtors you have to show. Provision you have to not write in liability side. Set off in asset itself. Presentation, but you did not show. Discontinued operation, one business you are going to close down, show that separately, so shareholder can analyze next year this business will not be there, or next to next year. You did not show separately. As per AS 24 you have to show. Presentation. Sir, disclosure means what? You did not show two court cases. Contingent liability. You did not show two court cases on the company. Absolutely wrong. What's the difference between classify and present? Okay. Presentation and classify are same. Classify could be other mistakes also. Okay. For example, we took sales side also. Okay. That is classification. Presentation, relatively same but little difference. Okay, presentation is how it is to be disclosed as per schedule 3 exactly, and classification is also based on same thing. Okay, moving on. Disclosure means what, sir? Disclosure. For example, legal cases on company, you did not disclose. Second example, promoter share is sold, you did not disclose. These are big things. Okay, related party, there is 90% sale coming only from related party, you did not show. So two new related party you did not show. These are also mistakes. Are you clear? So four kind of mistakes are there. Misstatement is difference between classification, amount, presentation and disclosure of a reported financial statement item. And classification, amount, presentation and disclosure required as per FRF. So this should be there, but I did this. Okay, mistake is known as misstatement. My last question, do we need to identify all misstatement? No. Material. What is material? 1% of sale. Mira is not clear. See, classify basically means what? Everything is classified under the right head. So first you do classification and then you present it. Okay, so relatively it is same only. First classification is done, then presentation is done. So if mistake is not identified here, maybe you will identify here. Are you clear? This is step 1, this is step 2. Tell me, first you present or classify? Classify. So find out mistake there itself. Are you clear? If that it is identified, it will not repeat in presentation. Otherwise, presentation issues could also be there if it is not done as per schedule 3. Clear? Okay. So with this we are done. Still we have not taught you anything, by the way. Okay. Come here, come here, come here, come here. Where we are? Number 1. Understand, to obtain reasonable assurance that financial statements are free from material misstatement. What did I explain you? Material misstatement. What did I explain you? Applicable FRF also I explained. Now I need to explain one word. We need to get reasonable assurance that financial statements are free from material mistakes and are prepared as per FRF. Now your next question, why reasonable assurance? Why not complete assurance? There are 3 questions and 1 answer. We will study this right now only. We will study this question right now only. So first question we are starting. Okay. Why? See, three questions can come. Number one, question. Read here. Why we give only reasonable assurance? Why audit risk can never ever be zero? Why we give true and fair view and not true and correct view? Three questions, one answer. One more time. Why we give only reasonable assurance? Why we never give true and correct view? Give true and fair view only. Why audit risk can never be zero? One last time I am repeating the question. Why we give only reasonable assurance? Why audit risk can never be zero? Why we give true and fair view and never true and correct view? Three questions, one answer. Because there are limitations in audit. We can never ever give complete assurance, absolute assurance, true and correct view. Risk can never be zero because there are limitations in audit. Can you explain a few limitations? Not few, I will explain all. Come here to our magic book. Number one limitation of audit is nature of financial reporting. Very easy. Our financial reporting is based on lot of assumptions, and these are subjective decision of management. What is subjective? Change from management to management, and these are based on several assumptions which also change. See, judgment by management are there, and these judgments are based on subjective decision of management which differ from management to management. Okay, let me take a brilliant example. There is a company whose conference call I was listening yesterday. So I said, very good, amazing, amazing. Okay, and they were telling our sale return last year was 12%. I said, very good, excellent. Okay, I was just listening headphone. 12%. But this year we are expecting sale return to be only 5%. I said, why? I did not say, someone has asked. They said, why? Because we have changed the policy. Earlier we used to dump the stock like mad person. Dump. Now we don't dump that stock. Okay. If retailer will ask, only then we will give. Earlier we used to intentionally tell, take. Now we don't force retailer. So due to that, sale return chances will drastically reduce. But auditor is not agreeing. Auditor is saying book 10% only. Okay. Why? Based on past we do a provision. So provision for sale return, we did how much? 10 to 12%. But actually it is 5. So this will reverse. This will reverse, he was saying. Okay. 35 crore our company's profit will increase. Now tell me, then why did he book 10? Because assumption. We are always conservative. Show losses but don't show profit. Are you clear? Don't show future profit. So I'm just taking one example. These assumptions keep on changing. Let me take 5 assumptions. Useful life of asset, rate of depreciation, provision for warranty, provision for sale return, fair value of asset. Now, if our financial statement are only prepared on assumption, baby, how can I give complete assurance? When you are preparing financial statement on assumption, how can I give complete assurance? I hope it is clear. Second, future event or condition may occur which will affect functioning of entity. Adverse event occur which affect functioning of entity. Tell one example. Sahara. Who would have thought Sahara will get closed? Kingfisher will get closed. Okay. COVID will come. So we don't know future event. Let's take another US tariff. US is imposing tariff of 50%. And our whole business is coming from US only. Who would have thought? Trump keeps on telling Modi our friend, Modi our friend. Okay. But such friendship. Understood? So future event. That is why I give reasonable assurance. I can never say company will function lifetime. Going concern could always be in doubt. I hope clear. Third, nature of auditing procedure. Whenever we are doing audit, the video you uploaded for exam is important. Is it enough if I study 6, 11 rest chapter only important concept? I would score 48 in last attempt. First of all, you need to understand, forget last attempt score. If you scored 70, 80, 90 or 10, 20, doesn't make any difference. Because ICI doesn't understand how much you scored in last attempt. So there is point number one. Forget that, it is gone. Last time, I had earned 42 crore rupees in 1 year. You will say, sir, what is this? Same way, what is this? Understood. Chalo. Now my second thing. Will everything come from important only? We have put a video of important questions. Will everything come from there? No one knows. Those who do full also fail. Last time ICI result 12%. Out of 100, 88 students failed. That is why it is number one course. Where others are struggling to get package. CA package is 20 lakh, 15 lakh. Because it is a hard course. So those who do full also fail. So doing selective and passing is a big dream. Or else we would take batch. Every paper will come from this only. Stamp paper guarantee. MCQ can come from anywhere. So you have to study full. After that, will you pass? That is also doubt. You will pass, okay? Because there are other people who think like you, Fatima. Then let us do selective chapters. So they will fail. Are you clear? You might pass also. I don't know. But we always believe we have to do full because we are doing hardest course of India. Money we want to earn like no one else earns. And study we want to do like others. Not possible. Okay, I hope it is clear. Third point, nature of audit procedure. Always remember our audit, there is practical limitation on auditor's ability to get evidence. Whenever I do audit, management will not give us everything. Okay, take this, take this, take this, especially when fraud is done. Okay, they will try to hide the fraud, and I am going with the intention that there is nothing wrong. Okay, see, our audit is done with the intention to get true and fair view and not true and correct view. And especially when management has done fraud, they will not tell, "Arey yaar, supplier fraud done, please check, please check, please check." So when I don't go with intention of fraud, I don't find a fraud. Are you clear? So that is why I give reasonable assurance only. I hope clear. Read nicely. There are practical and legal limitations on auditors' ability to get evidence. Management will not give complete information, and when they do fraud, they carefully plan the fraud. Even if I want, I cannot catch the fraud. That is why there's a beautiful phrase. Auditor is a watchdog and not a bloodhound. What is bloodhound? I am not there to do murder. I am there to do audit. I am a watchdog. I'll keep on smelling. If anywhere I find suspicious, I will go in detail. But if I don't find anything suspicious, no tension. I hope it is clear. So, audit procedure. Our audit is done with basic intention to get reasonable assurance, not complete assurance. And when I don't find fraud, I will not get fraud. In plus, if management has done fraud, they will not give me all the information. They will intentionally try to hide. I hope it is clear. Fourth, okay, fifth point is similar, so let me explain. Audit is not investigation. Understand, audit and investigation are different. Here, concentrate. What is the aim of audit? To get reasonable assurance. What is the objective of investigation? To find out fraud. Investigation is critical examination of accounts for specific purpose. Okay, when I know there is a fraud, I tell auditor, please go. It's a separate field. Audit is not investigation. For example, there is a fraud in supplier. I will tell auditor, please check this. This is investigation. Investigation is critical examination of accounts for specific purpose. Scope of investigation is narrow. In investigation, I check one area, two area in detail. Audit is reasonable assurance. Audit's aim is not to find fraud. If I find, I will report. Are you clear? And audit is general. I check all areas. I get reasonable assurance. Hopefully clear. Moving on. Last point. Okay. So audit is not an official investigation. And I am not expert in search and seizure of document. My work is to do audit. Last. Timeliness of financial statement and decrease in relevance of information over time. Very beautiful point. See, on one side, I have a pressure of timeliness. Timeliness means there is a deadline. Before 30th September, AGM should be conducted. So my report should be filed. Yes or no? Yes. So tell me, if I want to do audit on time, I need more data or less data? More data. And if I need more data, I need more staff. That is more cost. One more time, I need to do audit fast or slow? Fast due to deadline pressure. If I want fast audit, I need more resources. More resources means more cost is required. But on the other side, I have to make audit profitable also. You are not doing this for charity or what? Audit you have to think of reasonable assurance or profit. Both. I did not do CA course just for time pass. Are you clear? I want to do as many assignment as possible. Understood? I want reasonable assurance, but I want reasonable assurance that I should also be rich. Are you clear? So I will try to do as much assignment as possible. I want to do audit in less resources. So engagement is profitable. So maintaining balance between the two is difficult. On one side, there is deadline pressure. On one side, I want to finish the assignment in reasonable cost. So whenever I try to do that, it is not possible I give complete assurance. I will only give reasonable assurance. Hopefully clear. Let me read. We want more information to get more benefit, but more information may involve more cost, which we are not ready to incur. Why? Because there is deadline pressure. And at the same time, you want the engagement to be profitable. I am not doing charity. Many people feel, or audit, so I will give my whole life. No, I want to earn money. So maintaining balance between benefit and cost is difficult. We want lots of benefit in less cost, little difficult. Are you clear? So that is why I give reasonable assurance. Let me explain this point again. On one side, people are saying enjoy life, zindagi na milegi dobara. Okay, have fun, make reel, do this, have girlfriend. Another side, they are saying do see how to do both. If I concentrate more on this, my CA will suffer. If I focus more on CA, life will suffer. So maintaining balance is difficult. So right now, what you are doing? Neither enjoying life nor doing CA. So you are stuck in between. Let me read this. Let me read this much. Let me read this much. So actually, what is happening? Nothing. Super clear. Over. Tell me, what are limitation of audit? Oh my God, we have to learn this. Yes. Okay. Four questions, one answer. Four questions, one answer. Number one question. One, two, three, start. Why auditor gives only reasonable assurance? Why audit risk can never ever be zero? Why auditor give reasonable assurance? Why audit risk can never? Why auditor gives true and correct views? Sorry, true and fair view and not true and correct. Because auditor की फटी, because auditor की फटी, because auditor की फटी, audit fatty also you can say fatty whatever. Number one, nature of financial reporting. Number two, future event. So two F are done. Nature of financial reporting. F number two, future event. Nature of financial reporting, future event. Nature of financial reporting, future event. Nature of financial reporting, future event. A, 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 nature of auditing procedure. Nature of auditing procedure. Nature of financial reporting, future event. Nature of financial reporting, future event. Nature of auditing procedure. T. Timeliness of financial statement and decrease in relevance of information over time. Timeliness of financial statement and decrease in relevance of information over time. I. Not in the nature of investigation. Not in the nature of investigation. How much ever time you want, we can speak. What are limitations of audit? Auditor ki fati, auditor is fatty, auditor ki fati, auditor is fatty. Nature of financial reporting. F number two, future event. Nature of auditing procedure. T. Timeliness of financial reporting and decrease in relevance of information over time. Not in the nature of investigation. You have to learn this. Your time starts now. One last time. One, two, three, start. But what are limitations of audit? What are limitations? Auditor ki fati, auditor is fatty. Auditor ki fati, auditor is fatty. Okay. Nature of financial reporting, future event, nature of auditing procedure. T. Timeliness of financial statement and decrease in relevance of information over time. Not in the nature of investigation. Small break of 30 seconds. Learn nicely. Time up. Tell me what are limitations of audit. Okay, why auditor give reasonable? Why auditor gives true and fair view? Because auditor ki fatty or auditor is fatty. Nature of financial reporting, future event. Okay, A. Nature of auditing procedure. T. Timeliness of financial statement and decrease in relevance of information over time, not in the nature of investigation. Over. Moving on. Till now, I explained you how many objective. One objective. Come back to where we were. Don't know where we were, but we were somewhere here. Understood. Okay. So to obtain reasonable assurance that financial statements are free from material misstatement and are prepared as per FRF. Second. Now, I hope you understood all words now. Prepared as per FRF means what? As per the relevant law applicable. Material mistake means what? More than 1% of materiality. Why reasonable assurance? Auditor ki fati. This much clear. So now objective is clear. To obtain reasonable assurance that financial statements are free from material misstatement and are prepared as per FRF. Now you got assurance. What will you do with that? Report. To report on financial statement and communicate as per standard on auditing. Okay. So SS 700 standard on auditing of course gives format, but there are four types of report. Very important. This is the last basic thing. Then we move on to the chapter. To report on financial statement and communicate as per SA. How to report? There are four kinds of report. Come here. This is the last part. Listen very nicely. Okay, we are done. Tell me what are four kinds of report? Unqualified, qualified, disclaimer, adverse. One more time. Unqualified, qualified, disclaimer, adverse. One last time. Unqualified, qualified, disclaimer, adverse. Okay. Number one. Unqualified basically means what? Not so much qualified. But that is not the meaning here. Second meaning of qualified is conditional. What is unqualified? Unconditional love I do to you. Are you clear? What is unconditional love? Shuddha desi romance. Full romance I am doing. Unconditional love. Clean report basically means what? Listen. Financial statements are prepared as per FRF. So after doing audit, after getting assurance, what will you do? Give report. Okay. If you don't give report, what's the use? For example, you go to see a girl in Coimbatore, from Chennai to Coimbatore you go. Very far. After that, dad will ask how the girl is. Dad don't ask. My personal question it is. One slap dad will give. We came so far. At least report. So now we have to give report. Four types of report are there in India. Unqualified, qualified, disclaimer, adverse. Listen nicely. One, two, three, start. What is unqualified, sir? What is unqualified? Unconditional. Financial statement are prepared as per FRF. Okay. And there are no material mistakes. Mistake could be there. Material. Girl is too good. Then what will you tell? Dad, agree marriage. One pimple she has, then it's immaterial. She's chartered accountant. One small pimple you can also have. Understood. But I don't have. Okay, no problem. So I hope unqualified. Unqualified means everything is perfect. Unconditional. Financial statement are prepared as per FRF. There are no material mistake. Second, when is qualified report issued? Little tricky. Financial statement have material misstatement, but they are not pervasive. Yeah? What English you bro? Pervasive. What is this? Pervasive basically means okay, effect is spread to multiple accounts. Okay. Let's take example. Current asset also mistake. Okay. Debtor also mistake. Okay. A fixed asset also mistake. Inventory also mistake. If effect is spread to multiple account, we call it pervasive. Effect is spread everywhere. But your effect is not everywhere. It's a material effect only in one account. Or certain one account, then it is material but not pervasive. Wrong. Pervasive means two things. Effect is spread to multiple account. Second, if it is spread to one account, it is substantial portion of financial statement. Example, 90% sales are fixed. Then everything is wrong. Sales wrong, then debtor wrong, then cash balance wrong, then bank reconciliations wrong, everything wrong. Understood? So I hope you understood. What is pervasive? Effect is spread to multiple accounts. Second, if it is spread to one account, it is substantial portion of financial statement. two words. Multiple account, if one account, it's a substantial portion. If it is not there, then it's qualified. Qualified basically means what? Conditional opinion. Except this, all is good. Except, for example, girl had one past boyfriend. Okay. You also had 4 girlfriends. I did not have any girlfriend. No problem then. Everyone will have one. Okay, qualify, except that thing she's good. So financial statement have material misstatement, but they are not pervasive. Let's take example. Depreciation is not charged by 20 crore. Okay. You tell company, please charge. If they don't charge, give qualified report. Except depreciation, all is fine. Inventory are overvalued by 40 crore. Okay. Except that, all is good. Okay. So mistakes are in one account. Okay. I hope it is clear. Or, now very important. They could be material but not pervasive. What is could be? I have not got evidence of debtors. Now when I ask company, debtor evidence will not come. Do whatever you want. So you will say, except that debtor, all is good. So mistakes could be material. Misstatement could be material but not pervasive. In two case, qualified report will come. After getting evidence, I feel mistakes are material but not pervasive. I did not get evidence of one area. For example, all factory are visited. One factory I could not visit. Only one factory. It is small portion, 5% of inventory. Okay, then mistakes could be. I don't know exactly it is material, so I am saying could be material, but not pervasive. In two case, qualified report come. When I believe mistakes are material, but not pervasive. Or they could be material, but not pervasive. Why could be? I did not get evidence. For example, girl is telling, don't ask me what happened in 2017. You're like, why? Don't ask. Okay, don't ask. Ask later, after marriage, adverse. When adverse will come? Mistakes are material and pervasive both. Everywhere, everything wrong. Debtor wrong, creditor wrong, current asset wrong, fixed asset wrong, everything wrong. Mistakes are material and pervasive. But let me take one more example. Why? Please take, don't ask. Okay. 1, 2, 3, start. Financial going concern is not valid. Then financial statement have to be prepared on NRV. If you don't know, I am telling you. Whenever going concern doubt, financial statement are prepared on NRV. But you prepared on cost. Then to all wrong. Entire financial statement. Yes, that is why adverse report will come. If all mistakes are material and pervasive, effect is spread everywhere. If it is in one account, it is substantial portion. Okay, so if mistakes are everywhere, adverse. When disclaimer will come? When disclaimer? When I did not get evidence and I feel mistake could be material and pervasive. Why could be? I did not get evidence. If I believe, listen. If I believe they could be only material, then qualified. I went to do audit. Arey, books of account destroyed in fire. I again went, arey yaar, audit I want to do, please. Arey, books of account taken by income tax. Arey, I again went, where are books? Books of account not able to find. So I was saying, I could not do audit. I believe mistakes could be material and pervasive. Only one area I don't get evidence, qualified. I don't get everywhere, disclaimer. I hope super clear. Still, I want to do last revision. Mistakes are materially misstated. Qualified report if they have material mistake but not pervasive. Sir, material and pervasive both adverse. Listen, no sir, I did not get evidence only. Then disclaimer, no. If you did not get evidence but you believe mistake could be material but not pervasive, still qualified. Oh, material but not pervasive, both case get evidence or not qualified. Yes. Material and pervasive, disclaimer. If I don't get evidence, I hope it is super duper clear. No, it is triple clear. Shall we go ahead? Moving on. So second objective is also clear. Okay. I hope both objectives are done. Number 1, to get reasonable assurance that financial statements are free from material misstatement. Second, assurance I got. Now what I will do to report on financial statement and communicate as per SA. How to communicate for report over. Now we will finish all questions fast. 1, 2, 3, start. Base is built. Okay, let's start. First question of ICI book. Auditors should keep in mind following things to ensure financial statements are not misleading. Okay, so question will come straightforward, simple question. What things auditor needs to keep in mind to ensure FS are not misleading? Okay, so check following thing to ensure my financial statement are not misleading. Simple. Number one, accounts are drawn with reference to entry from books of accounts. Tell me first what takes place? Transaction. From transaction what? Entry. From entry, posting, ledger, etc. So what they are saying? All the ledger account is done based on journal entry. Of course. After entry only posting is done. What rubbish they have written. See, read here. Accounts are drawn up with reference to entry from books of account. You could have also written entries are as per the transaction done or voucher. Time pass. Accounts are drawn with reference to entry from books of accounts. Second, all entries are supported by sufficient and appropriate audit evidence. Your next question, what is sufficient evidence? Quantity of evidence. What's appropriate? Quality of evidence. It will come in detail chapter number 4, but let me still explain. For example, there is sales, okay, sales 100 crore. There should be sufficient evidence sales is correct. What will be sufficient evidence? Opposite person has, for example, you could have given quotation for sale. Opposite person has given purchase order. Then you have prepared invoice. After invoice, there is dispatch document. If all documents are available, I will say it's a sufficient evidence sale is true. So all entries are supported by sufficient quantity. What's appropriate? Amount should also match. In purchase order, per unit rate is 12 rupees. In sale invoice, it is 13 rupees. In quotation, 14 rupees. Then though evidence is sufficient, it's not appropriate. Tell me, quantity of evidence is important or quality? Both important. So entries are supported by sufficient and appropriate audit evidence. Third, none of the entries are omitted in the process of, by the way, they will not ask explanation in exam. Don't worry. None of the entries are omitted in the process of compilation. Usually we try to omit few voucher. Why? So our profit is more. If profit more, share price more. Okay. So none of the entries are omitted in the process of compilation. And nothing which is not in books has found its place in financial statement. Sir, this not understood. Sometimes in book sales are not there, but just to achieve our target we put some sale on the last day. Okay, related party sale. Why? So our target is increased, sale are increased, so none of the entries are omitted. Nothing which is not in books, fake sale, has found its entry in the financial statement. Simple. Okay, moving on. Next point. Information conveyed by statement is clear and unambiguous. What is unambiguous? Without any doubt, all the information in financial statement is clear, and unambiguous means what? Without any doubt, it is perfect information. Nothing is misleading. Okay, disclosures are proper basically. Now inside financial statement, what is that? Amount in financial statement is properly classified, described, disclosed as per AS. So as per accounting standard, all rules are followed. Okay, amount wise. Financial statement proper, amount proper. Third, last time pass. Statement of account show true and fair picture of what? Operational results, P&L, asset and liability balance sheet. Over. We will learn in 2 minutes. Over. Listen nicely. Entry statement. 2 words, remember. Entry statement. One more time. Entry statement. Entry statement. Okay. Remember. Very, very easy. Entry has 3 points. Statement has 3 points. Over. So entry. Only remember first one. 1, 2, 3, start. Accounts have been drawn up with reference to entry from books of accounts. So accounts are drawn as with reference to entries from books of accounts. Second, all entries are supported by sufficient and appropriate audit evidence. Third, none of the entries are omitted in the process of compilation, and nothing which is not in books has found its place in financial statement. Remember 3 points. All 3 entry. Very simple. Accounts are drawn with reference to entry from books of accounts. 2. All entries are supported by sufficient and appropriate audit evidence. Third, okay, none of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Remember till here. Done. One last time. Accounts are drawn up with reference to entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Last three statements. Information conveyed by statement is clear and unambiguous, not confusing. Now, inside statement, what is there? Amount. Amount in financial statement is properly classified, described, disclosed as per accounting standard. Last point is time pass. Statement of account showed true picture of operational result and asset and liability. Simple. Information conveyed by statement is clear and unambiguous. Inside statement, what is there? Amount. Amount in financial statement is properly classified, described, disclosed as per AS. Last point. Okay. Statement of account show true and fair picture of operational results and asset and liability. Learn nicely. Just read once, time pass. Statement, amount, statement of account. Simple. With this OK's question, I will also keep on telling you how many times it has come. It has never come in new syllabus. 1, 2, 3, start. Tell me, keep in mind following thing to ensure financial statement are not misleading. Last time, entry statement. Accounts are drawn up with reference to entry from books of accounts. All entry are supported by sufficient and appropriate audit evidence. Third, none of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Second statement, information conveyed by statement is clear and unambiguous. Come to second, amount in financial statement is properly classified, described, disclosed as per AS. Last, statement of account show true and fair picture of operational results and asset and liability. Come to second question. Come here. Scope of audit. From here, usually direct question doesn't come. What they ask is one point and tell, is it a part of scope? So how to remember this? Try to remember all 3 points individually. If any point comes, tell yes, it is a part of scope of audit. Like that, they are asking in module question, case study question. Understood? Come. What is your scope as an auditor? What are you responsible for? First, let us read second point. I will cover all aspects of entity relevant to financial statement. If someone is not wearing nice dress in the company, okay. If some two people are talking, okay. I am only concerned with second point. Coverage of all aspects of entity relevant to financial statement being audited. Understood? Okay. Come to first. In financial statement, what I will check? Reliability and sufficiency of financial information. Auditor will see information in accounting record and source data is reliable and sufficient for purpose of expressing opinion, not understood. What is reliability? Sufficiency, quantity, reliability, quality. So information in accounting records, that is ledger accounts, our books of accounts, how they are prepared based on voucher source data. Information in accounting records, these are records, and source data is reliable and sufficient. How to check? Number one, auditor checks reliability and sufficiency by making a study of accounting system and internal control, carrying out test, inquiry, other procedure. Let me explain. See, in big companies, directly audit is not done. First, you check systems. Accounting system is strong or not. If the system is strong, I will do less voucher checking. Why? System is strong. Exactly opposite. If system is weak, I will do more checking. Let's take example. Sales system is perfect, controls are excellent, sales is perfect, everything is picture perfect. Then I will do what? Test, inquiry less. Why? Controls are too good. But purchase, accounting system and internal control third class of purchase. Then I will do test, inquiry more. Over, very simple. So auditor assesses reliability and sufficiency by, okay, how to assess reliability and sufficiency? Making a study of accounting system and internal control. Based on that, carrying out test, inquiry, other procedure. Over. Third point, proper disclosure of financial information. So this question is very frequently they can ask. What they will ask? This thing is not disclosed in notes to accounts. These accounting policy are not followed. Is it the scope of auditor? Yes, I have to check disclosure. It is done by ensuring financial statement properly summarize event and transaction. Proper summary is there of all event, the whole transaction, and judgment made by the management are proper. What is judgment? Life of asset, rate of depreciation. Those judgments are proper. So we have to see financial statements summarize all significant event and transaction. Judgment made by management is proper. Inside that this will come. Second, we also have to see selection and consistent application of accounting policy. Depreciation method is same as last year. If changed, effect is given prospective or retrospective. Okay, inventory method same as last year. These are accounting policy. Selection and consistent application of accounting policy. They will clearly ask, depreciation method is changed. This disclosure is not given. Is it the scope of auditor? Yes, you have to say P point. This one. Understood? So here basically we have to see judgment and accounting policies are properly selected and consistently applied as per FRF. Understood. Now easily learn. Tell me. Three things will come in scope of audit. What is the scope? Wrap करेंगे, wrap करेंगे, wrap करेंगे. Technique is very simple. It's wrap. What's the technique? Wrap, 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 wrap. RAP, wrap. R. Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. P. Proper disclosure of financial information. One last time, what's the scope of audit? Wrap करेंगे, wrap. Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. Proper disclosure of financial information. Small break of 10 seconds. Done. Tell me scope of audit. What does it cover? Wrap करेंगे. Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. B. Proper disclosure of financial information. In that we will see judgments and accounting policies. Over. Sir, what it doesn't include? Maybe small case study. Auditor is not expected to do duty which fall outside his competence. If you don't know particular thing, appoint an expert. Example, life of building I cannot check. I am not expert in civil structure. Are you clear? Okay. Second example, a fair value of asset. Sometimes there is a complicated asset. How can I calculate fair value? I am not valuer. I am auditor. Okay. Third example we can take actuarial valuation. Actuary is complicated calculation. See what is actuary? I will try to explain little. For example, some employee retire in between, some employee retire before age, some employees die. So we have to pay them PF and ESIC. Provident fund and ESIC, when do you pay? Employee state insurance. Let's see provident fund at the time of retirement. But those who retire in between, some people die in between, some people dash happens, we don't pay them. At the time of retirement only we pay. But we cannot book entire expense at the time of retirement. Every year we have to book expense because employees are working in the company. Okay. Matching principle. So tell me how much expense to book every year? That actuary will tell. Actuary is a separate course, harder than CA also. Hope you understood that actuary will do that. We will not do. Okay. Second, auditor is not expert in checking documents. You don't have to learn this by the way. Okay. I am not champion that by this document is absolutely fake. This is a Xerox document. No, I am auditor. Audit is not an official investigation into alleged wrongdoing. That's investigation. He does not have power of search or seizure. I am not income tax officer. Search, seizure. Are you clear? Over, sir. Now this is time pass. Just read once. Two types of audit are there: compulsory, voluntary. Compulsory, voluntary. Tell me, for whom it is compulsory? You don't have to learn, but you just should know this is compulsory. May come as MCQ. So remember only one word here. Wherever public interest is there, it is compulsory. Wherever public will be affected, audit compulsory government is made. Why? Because public would be affected. Simple. In companies, whose money is there? Shareholder. Compulsory. Banking, whose money is there? Yours and mine. Compulsory. Electricity supply affects us or all people? All people. Compulsory. Cooperative society, for the member, by the member, of the member. Members affected. Compulsory. Public and charitable trust. You are taking money from so many people. You are not misusing no trust. Are you clear? Compulsory. Corporation set up under special act of parliament or state legislature, LIC. Special institutions which are set up by government. Compulsory. Public money. Okay. Specified entities under Income Tax Act. Every year above a certain turnover, your audit is compulsory. No need to learn. Understood. Voluntary. For whom it is voluntary? Proprietor, partnership, HUF. Small person, little bigger partnership, little bigger HUF. Why? It is your own interest. If you want, do audit. Others are not affected. Okay. So compulsory, voluntary for proprietor, partnership, HUF. Other all compulsory. MCQ may come. Till now come? No. Super easy. Now, I think we are almost done, but still we have one topic. Sorry, after one topic we have one big topic, and then this chapter might get over. But let's not talk much. Let's finish advantage. Limitation we already did. Advantage we will do. What are advantages of doing audit? Sir, I have one question. Why do I do audit? What's the advantage? Why audit? Why? Okay, here what is easy? Everything is easy. Time pass. Only learning is hard. Listen nicely. What is the advantage of audit? Audited accounts provide high quality information. It gives confidence to user. Information on which he is relying is qualitative. Let's take example. Audited accounts give high quality information. It gives confidence to user. Information on which he is relying is qualitative. Simple. Tell me where you will get more confidence. These are two books. Okay, this one audited, this one not. Of course audited. It gives confidence to user. This is perfect. Okay, because audited. Second, it safeguards interest of people who are owner. Shareholders cannot come every day in the company, but when they see auditor has checked, it will safeguard their interest. They know fraud will be detected. Third, time pass point. So I'm going just reading. It acts as a moral check on employee doing fraud or defalcation. See, if audit is not there, he might continue fraud. But if auditor is coming, it's a moral check. Arey, let me not do fraud, I will get caught. I have to go to jail. Understood? Next one. Audited statements are of great help to government authority in settling liability for taxes. Government want to check how much tax to pay. So they appoint tax audit is there. Tax auditor will check everything is properly taken, debit, credit, okay. Now government confidence will increase. Tax auditor has checked, no tension. Audited statements are of great help to banker in deciding whether to give loan or not. Bank check what? Interest coverage ratio. How much times of interest you are earning money. But when auditor will certify, "Arey yaar, this profit," very true. So let us give loan to them. They are earning 10 times more than interest. Give. Audit helps in detecting error or fraud or both. Both. Intentionally done fraud, unintentionally error. Last point. Auditor reviews existence and operation of control. Reports weakness in the same. Very simple. I will check control exist or operate. Both. First it should exist. Only then it will operate. Tell me, are you studying properly? For that you have to come and attend lecture. That's exist. Study comes later. Operation. I hope it is clear. Let me still take, if you want, one example. All invoice above 50,000 will be signed by purchase manager. Control exists. Now check a few voucher. Really sign is there or not? Existence and operation of control. I hope that is clear. Yes. So auditor reviews existence and operation of control. Reports weakness in the same. Let us learn this advantages of audit. Come on, everyone. Very, very simple. Okay. Okay. We'll run from here. Start. Let us learn these 3 points. Rest all are very easy. What are advantage number one? Audited accounts provide high quality information. It gives confidence to user. Information on which is relying is qualitative. One more time. Audited accounts provide high quality information. It gives confidence to user. Information on which is relying is qualitative. Second, it safeguards the interest of people who are owner. Safeguards interest of people who are owner. Third, acts as a moral check on employee doing fraud or defalcation. Learn till here. One more time. Audited accounts provide high quality information. It gives confidence to user. Information on which is relying is qualitative. It safeguards interest of people who are owners of the company, shareholder. Acts as a moral check on employee doing fraud or defalcation. Remember till here. Sorry, moving on. Sorry. Come on. Now 4 points are super duper easy. Bank, Government, bank, error, fraud control. Government, bank, error, fraud control. Number one, audited statement are of great help to government authority in settling liability for taxes. Audited statement are of great help to banker in deciding whether to give loan or not. Audit helps in detecting error or fraud or both. Last, auditor reviews existence and operation of control, reports weakness in the same. Clear? One last time. Government, bank, error, fraud control. Government, bank, error, fraud control. Audited statements are of great help to government authority in settling liability for taxes. They are of great help to banker in deciding whether to give loan or not. Audit helps in detecting error or fraud or both. Auditor reviews existence and operation of control, reports weakness in the same. Read small break 10 seconds. Done? Chalo, very easy. Audited statement are of great help to government authority in settling liability for taxes. Audited statement are of great help to banker in deciding whether to give loan or not. It helps in detecting error or fraud or both. Auditor reviews existence and operation of control. Reports weakness in the same. Over. Very easy. Easily you can write 5 points. We have learned all. Now we are on to the last topic. Shall we start last topic? Very much attention required. Shall we start last topic? Before that, let us do this small topic. Okay. Then we have one last topic, syllabus over. Chapter 1 fully over. Nothing can come beyond this. Every word we have discussed. Okay. Provided we finish last. But let's do this. Then we'll take small break of 1 minute. Okay. And then finish last topic and then we are done. Okay. Listen nicely. What's the relationship of audit with other discipline? How is audit related with other? First, just understand learning. I will do time pass. This has never come, but it can come. Audit and accounting. How are they related? The auditor reviews accounts only. So we should have good knowledge of accounts. Only then we'll review. If we don't know accounting standard, what audit we will do? See here. Auditor reviews financial statement, which are prepared from accounting process only. So auditor should have knowledge of accounts. Second, sir, how audit is related with law? Auditor should have good knowledge of Companies Act. Only then we will check no Companies Act section followed or not. Oh yeah, true. Why economics? Auditor should have knowledge of overall economic environment to find out inherent risk, control risk. Okay, let's take simple example. Inventory is valued at cost or NRV, whichever is lower. Now you should know as per economics, this stock is not doing well. Okay, in market conditions are very bad, so NRV will be less. We need to do provision. If I don't know, then I cannot do audit. You can still do, but not good audit. Understood? Auditor should have good knowledge of economic environment. Why behavior science? Okay. See, when you are doing audit, no, from face you should make out whether this person is doing fraud or not. Are you clear? Should we learn this question? Everything we have to learn, which I will make you learn. Everything which I make you learn, you have to learn. I don't make you learn, ignore. This I will make you learn. Listen. Auditor and behavior science. Sir, why behavior science? Arey yaar, knowledge of human behavior is a must. I have to understand, look at the face and understand this guy is lying, this guy is telling truth, this guy is lying. Are you clear? So that basic knowledge I should have. Knowledge of human behavior is required to do audit. Sir, why stats and maths knowledge required? Arey, sampling I will do. So auditor is required to have good knowledge of sampling, okay, to derive at meaningful conclusion. Very good. Data processing, EDP audit, electronic data processing. These days everything is computerized. So I should have knowledge of computers, Paytm, Zomato, GoIBibo, everything automated. So I should have knowledge of electronic data process, how data is processed. Are you clear? One line they have written. In module also same they have written. Why knowledge of FM? So auditor should have knowledge of several, right, chapters of FM. Ratio analysis. Are you clear? Okay. Second chapter, inventory management, working capital cycle, fund flow. Okay. All chapter name you have to write. Last. Sir, why production? We should understand about production, cost system, marketing. Are you clear? Costing also we should understand. Cost or NRV. So what is covered in cost? What is not covered? Now, how to remember this? Inside to you can write. Very less chance of coming, but something, sometime so they will ask no, so God knows when. What is the knowledge of audit with other discipline? If they ask, then bonus. How to remember? All subject of CA foundation you have to write. CA foundation with subject you studied. Audit and accounts. Audit and law. Audit and mathematics and statistics. Okay. Last point, audit and eco. 4 point done. Understood? 4 point done. Exam how many write? 5. But I will make you learn all 8. Many people don't know. Welcome to best lecture of FM, SM and audit. So audit and audit don't write. But audit and FM who teaches? I. Sir, we have not taken your FM. Then 1 mark less you will get. Audit and FM. Where is the audit and FM? See here. Where FM is? Ah, here. Not done bold. Audit and FM. Second, those who don't know, SM also I teach. Okay, so behavior science is SM, audit and SM. Costing I don't teach. Okay, so group 2 subject, audit and production costing. I used to teach EIS also, audit and electronic data processing. Over. All subjects done. All subject done. All subject done. All subject done. Chalo, shall we go ahead? Ready? Tell me how to learn. How to learn. How to learn. Very simple. Year. Remember any 5 points. Audit and accounts, audit and law, audit and mathematics and statistics, audit and economics, audit and behavior science, audit and FM, audit and production. Over. All we learned. Now, we have one last question. True. Only one last question. Are you super ready or little tired? Everything we have done in this chapter. Not even one word is skipped. And last question is asked since 2 attempts. Since 2 attempts, what is coming in exam? Only this question which is pending. Super ready? Chalo. So take only 1 minute break and then we start, because this is only 15-20 minutes topic. Then chapter fully over. So 20 minutes or 15 minutes you have to do super duper attention. Last topic and everything done. This is how we will wind up chapter. Don't worry, we will cover every single thing. After this, what is expected of you? Do all module questions. Already uploaded on YouTube. All module question. Extra question if you get time, that is also uploaded. Entire playlist is there. There we have module questions and extra questions. Okay. So first is module. In English also it available. You can translate about English language. Automatic I will come through AI in English. Understood? And other questions are also there. So take 1 minute break and then we start the last topic of 20 minutes. See you in 1 minute. Chalo, let's start guys. Ready? 1, 2, 3, start. Start guys. 1, 2, 3, start. Let's start. Very, very important. Just listen to a 15-minute story, every concept covered. Start. 1, 2, 3. Pin drop attention required. Tell me who will prepare. Number one, who will prepare financial statement? Management prepare. See here, management prepare. For whom they prepare? User. Who are user? Debtor, creditor, auditor, partner, supplier, transporter, mutual fund, etc. So management prepare financial statement. For whom they prepare? They prepare for the user. Who is user? Shareholder, debtor, creditor, employee, supplier. This much understood, fully understood. Moving on. Now, management doesn't have much knowledge. So management will ask one chartered accountant, sir, madam, I don't know how to do compilation, consolidated financial statement. Or maybe I don't know Ind AS 205, whichever Ind AS. I don't know AS 18. So CA can also help in preparing financial statement, not only audit, also preparing. So Santosh we are appointing, CA Santosh. She is preparing, helping management in financial statement. But she will not do audit. Why? Maker checker, independent person. Understood. So we are appointing friend of Santosh, CA Gitanshu. Okay. We are telling, please you do the audit. Why Santosh is not doing? Santosh is preparing. You only write paper, you only check. Too much fun. 92 marks you will get. Okay. But we need ICI to check. Independent person. So Gitanshu will check. Financial statement are prepared as per FRF. Till your story clear. One more time. Who prepare financial statement? Management. In English, we call management responsible party. For whom they prepare? Intended user. Understood? And person who will check, we call him practitioner. What do we call? Tell practitioner. Why not auditor? You will understand after 2 minutes. Okay. Shall we go ahead? Yes, sir. There are two services in audit we give: assurance, non-assurance. One more time: assurance, non-assurance. When practitioner gives assurance to the user which will increase their confidence about financial statement, it is called assurance service. Let me again speak. Only 15 minutes lecture is there. Listen again. When practitioner gives assurance to users of financial statement which increase their confidence about financial statement, we call it assurance service. One last time. When practitioner gives assurance to user which increase their confidence about financial statement, it's assurance. All service which are not assurance as per book are non-assurance. Now let me explain easier part, non-assurance. Many times we give accounting service, we give compilation of financial statement service. Okay, we give tax representation service on behalf of client. We will go to tax authority. Okay, we will help them in designing internal control. This service also you can give, not only audit. Understood? Understood. These are known as related service. Which service? Related. On this there is one standard which is applicable, name is SRS, standards on related service. Which is the standard applicable here? SRS, standards on related service. Okay, they start from 4000 to 4699. Okay, compulsory, whenever related service standard will come, it will be from 4000 to 4699. Here we are having introduction of all standards on auditing, only intro. Okay, 4000. Why? Due to this international codification is there. Everywhere the standard name will come from 4000 to 4699. So there is relatability. I hope it's clear. Whenever we give related service, how to give service, there are standards. How many are in our syllabus? 0. You will study in CA final. Only introduction is in our syllabus. One last time, whenever we give related service like accounting service, okay, compilation of consolidated financial statement, tax representation, these are related service. Just remember one word, add one word: standard. That is the name of topic, standards on related service. They will start from 4000 to 4699. Whenever it is issued, you will study more about them. CA final. As of now, nothing to study except intro. Come to this side. Whenever practitioner gives assurance to the user which will increase their confidence about financial statement. One more time, practitioner gives assurance to user which will increase their confidence about financial statement, it's called as assurance service. Now you give assurance on two things: historical financial statement, other than historical. What is other than historical? Future financial statement, projected financial statement. Not understood. Okay, I also did not understand. Historical means the one which are already prepared. So till 31st March 2025, all historical. Historical means prepared one. Okay, historical. Can I give absolute assurance? Not possible. Limitation of audit. Already studied. Whenever I give reasonable assurance on historical financial statement, whenever I give reasonable assurance on historical financial statement, what is historical? What is reasonable? High level of assurance, but not complete or absolute assurance. It is called as audit. Whenever I give reasonable assurance on historical financial statement, that word is audit. See, practitioner is a broader term. He will do all things. He will give assurance service, non-assurance service, historical service, that every service. Audit means what? Whenever we give reasonable assurance on historical financial statement, that work is known as audit. And on audit, what is applicable? Standards on auditing. They start from 100 to 999. That is in our syllabus. As of now, only introduction is there. Audit. On audit, what is applicable? Add one word. Standards on audit. 100 to 999. Come here now. Whenever on historical, I give limited assurance. Now you'll ask me, why to give limited? Time is less. Time is less. Let me take example. Screener. Let's take one company, Neogen FinTech. Any company you can take. We have taken this. See here. Their June audit is done, by the way. These are June financial statement. Every quarter listed company has to give financial statement. But, see what they have written here. See what they have written. English reader, newspaper publication of unaudited results. Why unaudited? We have not done audit. We have just done review. Every quarter we have to give financial statement. Auditor will not do audit. Brief review they will do. Why? Time is less. Audit takes 1 or 2 months. By that time next quarter will come. Every quarter I am not free to do audit. Audit is done. What is quarter? 1st April to 30th June. 1st July to 30th September. Understood. Now, in that 3 months, I will check hardly 5-7 days. 3 months operations. I don't have that much time. Every quarter, company also costly, audit also costly. So, audit is done in year end only, but I need to do brief review. Everything is proper. 5-7 days, I will go and check. That is why they write here unaudited. See here. Review for 6 months is example. Review for 3 months is example. Review for 9 months is example. At year end only audit is done. Every 3 months I do review. Over. Now in review, tell me, I will get sufficient and appropriate evidence? Yes, but I will get limited conclusion. Because I don't want to find everything. See, that's known as quarterly audit. Review. Okay. Now tell me on review, what is that? How to do review? Standards on review engagement are there. In CA final, they will come. So just add one word. This is known as review. Standards on review engagement. 2000 to 2699 is the number. How many we have to study? 0. One question I have. What is difference between audit and review? Amazing question. Come here. Whenever we give reasonable assurance, high level of assurance, audit. Whenever I give lower level of assurance, how much lower? That we don't know. Little lower. It's known as LR, limited review. Here we do extensive procedure. Here we do fewer procedure. Here we get reasonable conclusion on basis of sufficient and appropriate evidence. Here we get limited conclusion by getting sufficient and appropriate evidence. So simple, high level of assurance, low level of assurance. Extensive procedure, fewer procedure. Extensive procedure, so I get reasonable conclusion. Here limited conclusion. Over. Over. Come back. The same thing is written here also. I will not read now. Come now. So standards on review 2000 to 2699. Now. Other than historical, that is future information, prospective information. Okay. Whenever I give report on internal control, whenever I give report on projected financial statement for bank loan, okay, bank CA has to give report on projected reports, that projected assumptions are true. Okay, report on internal control, report on projected financial statement, report on budgets. Okay, for future I can never give complete assurance. I can never give reasonable assurance also. Only limited assurance I can give because future is in no one hand. Are you clear? So future I can give limited assurance only. These are known as assurance engagement because I am giving assurance for future. So here what is applicable? Standards on assurance engagement. Add one word, standards on assurance engagement. 3000 to 3699. Difference between low and moderate level. Moderate and low is same. Same it is. Same. Absolutely same. Standards on review engagement 3000 to 3699. Over. Clear? On all these standards, SQC is applicable. Standard on quality control. This is applicable to CA firm. CA firm will do whichever assignment. Whether you do audit, review, assurance, related service, do the work properly. Do the work properly. So on all SQC is applicable. Standard on quality control. SQC 1 little part is in chapter number 11. Over. Chapter over, of course, we have to read. Again, I will explain everything. 1, 2, 3, start. There are two services, assurance, non-assurance. In 1 minute, over. Here. Whenever. Can you speak one more time? Yes. Whenever. We give other than assurance service, it's non-assurance. Take one example, accounting work. Tell me on this, what is applicable? Related service, these are called. Which CA can give. Standard on related service applicable, 4000 to 4699. Whenever we give assurance to user, which will increase confidence of user, this is there are two things, historical, other than historical. Historical, what is historical? Already prepared. Three assurance are possible in this world: absolute, reasonable, limited. Absolute I cannot give. Whenever I give reasonable assurance on historical financial statement, I call it audit. On that, what is applicable? Standards on auditing, 100 to 999. Whenever I give limited assurance, why? Time is less. Unaudited result. I have less time. I will do review only. It's called review engagement. What is applicable? Add one word. Standards on review engagement. 2002 2699. What's the difference? Here I do extensive procedure. Here I do fewer procedure. Here I get reasonable conclusion. Here I get limited conclusion. Last part. Okay. Whenever I give report on projected finance other than historical, that's prospective information. Prospective report on internal control, budget, projected financial statement. These are assurance engagement. On this, what is applicable? Add one word, standards on assurance engagement. Always I will give lower level because it's for future. 3000 to 3699. On all, what is applicable? Standard on quality control. Whenever firm does any damn work, standards on quality control. Over. With this we are done. I will read once. Chapter is finished. 1, 2. Why am I reading? So your confidence will increase. Okay, no, not this. This question, important one, we will discuss. 2 minutes only. But let me read everything. Practitioner give assurance. Historical financial statement. Not possible. Absolute. High level of assurance, standard on audit. Limited is lower level of assurance, fewer procedure as compared to reasonable. Standard on review. Prospective information based on events that may happen in future. Report on internal control, etc. Limited only, it is moderate level because on future we can never give complete assurance. Standard on assurance engagement. Practitioner doesn't give assurance, but performs agreed upon work, whatever is agreed, okay, accounting, etc. Standard on related service, 4000 to 4699. What is standard on quality control? Whichever work we do, all engagements follow system of quality control. All engagement, whether historical, other than historical, review, related service, okay, assurance as well as non-assurance. All firms have to do best quality work. Oh. Now 2 questions are pending. Let's finish both. Come here. Relatively good question. This question can come. What are elements of assurance engagement? In every assurance engagement. Okay, by the way, doubt till here or no doubt? Any doubt? Because now 5 minutes only pending. 10 minutes max. Chalo, going ahead. First, what are elements of assurance engagement? One, two, three, start. This question not in my magic book. Maybe you have an older version of magic book. Have you purchased the latest magic book? Then this question should be there. If not, you will get an extra sheet will be there, blue color. In that also it will be there. Extra blue color sheet will be there. Something like this. Is it there? I don't know. No, it should be there. Maybe you have old version of magic book. You must have purchased before 2-3 attempts. Then it will not be there. Understood? Chalo, moving on. What are elements of assurance engagement? Okay. One, two, three, start. In every engagement, how many things are there? Very simple time pass question. Number one, three-party relationship is there. Three-party name is RIP, responsible party, intended user, practitioner. One line. Responsible party is the party responsible for preparing financial statement. Who is intended user? Intended users are those users for whom financial statement are prepared. Over. Who is practitioner? Practitioner is the one who gives assurance. Over. Tell me one line you can write. Three-party relationship between RIP. Rest in peace. No. Responsible party is the party responsible for preparing financial statement. Intended user. Users are those people for whom financial statement are prepared. Practitioner. Practitioner is the person who gives assurance as well as non-assurance service. Over. Tell me, what do I do there in audit? Okay, elements of assurance, what do I do? Appropriate subject matter. Information to be checked by practitioner. Information to be examined by practitioner. What is the information? Financial statement. Sir, how I will check? How I will check? As per suitable criteria. Suitable criteria is laws, rules, regulations, okay? Based on which financial statement are audited. That is schedule 3. Benchmark which is used to check financial statement, laws, rules, regulation, guidelines. Sir, after checking what I will get? Sufficient and appropriate evidence. Sufficient refers to quantity of evidence. Appropriate refers to quality of evidence. Already you know. Sir, after getting evidence, what you will do? Written assurance report. A written report contains conclusion about subject matter. Which report you gave? Written report is there. Written assurance report contains conclusion about subject matter. Super duper easy. Definitely it can come. What are elements of assurance engagement? Elements of assurance engagement. One, two, three, start. Only remember one point. Rest all are time pass. A three-party relationship involving RIP, responsible party, intended user, practitioner. Remember only first point. Elements of assurance engagement. Three-party relationship involving RIP, responsible party, intended user, practitioner. What will this party do? Okay, check subject matter, appropriate subject matter. Subject matter, how to check? As per suitable criteria. Subject matter, how to check? As per suitable criteria. What we will get? Sufficient and appropriate evidence. What to do? Written assurance report. Over. One last time. Three-party relationship involving RIP, responsible party, intended user, practitioner. What these people will do? Check subject matter. How to check? Suitable criteria. After checking, what to do? Sufficient and appropriate evidence. What to do with evidence? Written assurance report. One last time. Tell me what are elements of assurance engagement. Three-party relationship involving RIP. What will these parties check? Appropriate subject matter. How to check? As per suitable criteria. What we will get? Sufficient and appropriate audit evidence. Based on that, what to do? Written assurance report. Time over. Small break. Read for 5 seconds. Time up. Tell me, what are elements of assurance engagement? Three-party relationship involving RIP. What they will do? Appropriate subject matter. How to test as per suitable criteria. What we will get? Sufficient and appropriate evidence. What to do with evidence? Written assurance report. Time up. Moving on. Last question. Why standards are needed? Why do you need all these standards? Why do you need all these standards? Number one, to improve the quality of audit. Of course, audit quality will be better. Second, improve quality of financial reporting also. Okay, so financial statements are also properly prepared. Why? Because audit is proper. Improve quality of financial reporting. Help user to take better decision. Third, equip accountant with knowledge and skill. All CAs, if standards are there, then knowledge and skill will improve. So 3 point, jabardast time pass. Number one, improve quality of audit. Second, audit is done of what? Financial statement. Improve that also. Improve quality of financial reporting. Okay. Because so help user can take better decision. Third and last point, improve the equip the professional accountant with knowledge and skill. Very simple. So tell me, three improvement are there. Why standards are needed? Number one, improve quality of audit. Audit is done of what? Financial statement. Improve quality of financial reporting so user can take better decision. Okay, who will do audit? Accountant. Equip professional accountant with knowledge and skill. Simple. Last two, standard help in carrying out audit at par with global practices. Okay, see, standards are same everywhere. US, France. Okay, we have copied our US standards only. So standards ensure carrying out audit at par with global practice because the standards are same as global. Standard equip professional accountant to carry out audit at par with global practice. Last, provide uniformity in audit as audit is done in using standard. Be it Tata Motors or Mahindra, audit is same because both auditors are following same standard. So this is local uniformity, it is uniformity with abroad. Mahindra can compare with Tesla because both are following same standard. Mahindra can compare with Maruti because both are following same standard. So standard help in carrying out audit at par with global practice. Okay, standard help in carrying out audit as uniformity is done using standard. I hope it is clear. Nothing great. Read last 2 points. Standard help in carrying out audit at par with global practice. Standards provide uniformity in audit as audit is done using standard. This is local, this is outside. Standard help in carrying out audit at par with global practice. Standard provide uniformity in audit as audit is done using standard. Over. Break. 5 seconds. Learn. Then tell me why standards are needed. It improves quality of audit. Okay. Second, it improves quality of financial reporting, helps user to take better decision. Equip professional accountant with knowledge and skill. Provide uniformity in audit because audit is done at par with global practice. Third, provide uniformity in audit as audit is done using standards. Over. Now, one more question is there here. Tell me, everyone has to follow standard? Yes. What if you don't follow? Okay, just we will read once. Over. See, duty. Situation may arise when specific procedure as required by standard is ineffective. Okay. So for example, standard tells take debtor confirmation. But that debtor is not giving confirmation. Then what to do? We can do alternate procedure. But we have to write that we have done this procedure and this is the reason we could not follow procedure as given in the standard. May come for 2 marks. Okay. So Do we have to follow standard? Yes, every auditor has to follow standard. However, situation may arise when a particular procedure is ineffective for particular engagement. In such a case, we have to document how alternate procedure was used to achieve the purpose. What is alternate procedure? Maybe last year balance we will take. That time confirmation came. Add the sales minus the cash. Okay. Last year balance. Add all sale minus cash. Is the balance matching? Okay, then we have to write how alternate procedure helped to achieve desired purpose. Also, reason of departure has to be mentioned. The debtor was not giving confirmation. Very simple. Every time we have to follow standard, yes. But sometimes if it is not possible, we have to write the reason why a particular procedure is not suitable for this engagement. How alternate procedure help us to achieve desired purpose and write reason. Over. With this, absolutely, amazingly, mind-blowingly, we have done entire chapter. Not even one word is skipped. I hope this chapter is fully super duper clear. Please like the video. If you have not liked till you are new to channel, subscribing is compulsory. Okay. Now, our target one is over for today's booster. Okay, that's chapter number 1. If you are in mood, we will start new chapter after break. If you are not in mood, that's it for today. As you say, what you want to do, reply fast. What is your mood? Is your mood clear? Then after 10 minutes, we can do little more chapter 11. Tomorrow we can do. Okay. But then on last days, I think we'll have little more target. Yes, but it will keep on increasing load. Load will keep on increasing then. That's the only. If you want to do in 10 days, if you want more days, then okay. Tomorrow. I don't know what to do. Shall we move on? Maximum 30 minutes. Shall we study still after a 10-minute break? I want to discuss chapter 11, this chart. Easy one. Tomorrow we have tomorrow's target also. I am telling you from beginning only. Tomorrow our target is what? Chapter number 2 full. Chapter number 6 full. 2 chapter we have to do tomorrow. 2 and 6. Easily it will be done. Be rest assured. Very easily. I don't want to teach full chapter 11. Only this one chart. So when we do chapter 11, load is little less. 11 day after tomorrow. Only this one chart I have to teach you. Bas, that's it. I think we can do it. We will do half an hour, not more. Time is 9:58 on the clock. We'll come at 10:10, okay, and finish this. 10:10, okay. 10:10 and max I will teach 30-40 minutes, not more. Even less time. If we are able to do in 20 minutes, we will go. Okay. See you at 10:10. Let's stay serious for 5-7 days. So starting only load is covered. 10:10. Bye bye. Or 10:12 max. Bye. Chalo, ready? Shall we go ahead? Shall we go ahead? Voice, audio, video, all clear. Only half an hour lecture maximum. Come fast, everyone. Ready? Or shall we wait one more minute? Chalo, ready? Let's start. One, two, three. Listen very, very nicely. One, two, three. Start. Essay 210, we are going to discuss this only one page. We have to discuss this page is easy. No, because it is very easy. Okay. Essay 210, agreeing the terms of engagement. So, agreeing the terms of engagement. This is the way to remember essay. Essay 210, agreeing the terms of engagement. 10 men, 10 men. Is it matching little, little? Okay, so that is how you have to remember. One last time. Essay 210, agreeing the terms of engagement. Essay 210, agreeing the terms of engagement. I hope it is clear. See, audit is also engagement. Like we do engagement, boy and girl, same way. Audit is also engagement. We are doing engagement with the client that he will follow certain rules. We will follow certain rules. At the end, we will do audit. He will pay fees. That's the simple thing. I hope it is clear. Okay. One more time. See, like we do engagement, there also terms are clear. Any girl who is chartered accountant will tell to boy, I want to do job. He's like, no, no, job not allowed. Then what did I do CA for? Not for fun. Your life is as important as my life. If I don't want to do, later I might not do. But I want to do job. This is expected. If allowed in your family, I will get married, otherwise not married. This is your precondition. You are like, job is compulsory for me. Only then I will get married to you. Same way, auditor will put some preconditions with management. If management agrees, yes, 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 this condition acceptable, then do audit. Otherwise, don't do. I hope clear. So basically, we have to study what today in half an hour. Let me explain for 10 seconds. Engagement letter. Who will prepare? If you don't know, I will tell you. Written engagement letter is prepared by auditor, given to the client. What is there in engagement letter? Things, responsibility of auditor, responsibility of management. What will be the fee? What work you will do? Simple. Like in marriage also, we clear all terms condition. This is terms and condition. Hope it is understood. Chalo, start. One, two, three. So I hope this much you understood. Basically, a engagement letter is prepared. So tomorrow there should be no fight between auditor and management. I hope it is clear. So let's start. As per SA 210, agreeing the terms of engagement. First question which can come is, what are preconditions for audit? Your next question, what do you mean by precondition? If this condition is fulfilled, only then auditor will accept audit. Otherwise, he will not accept. So, engagement letter is prepared later. First, precondition are agreed. What is precondition? Number one, used by management of a acceptable FRF in preparing financial statement. An agreement by management and TCWG, the premise on which audit is done. Absolutely not understood. Again, I will explain. What is precondition? Management will use a acceptable FRF for preparing financial statement. My work is to do audit, not prepare financial statement. Management, you will prepare financial statement as per applicable FRF. What is applicable FRF? Schedule 3, used by management of applicable FRF for preparing financial statement. An agreement, management and TCWG are agreeing the premise. Premise means basis on which audit is done. Audit will be done as per schedule 3. I hope it is clear. So number one precondition is used by management of acceptable FRF. Management is using acceptable FRF for preparing financial statement. An agreement by management and TCWG, premise on which audit is done. What is premise? The basic assumption on which audit is done. Let me explain in detail. They have written here. So they can ask in exam, what are preconditions for audit? Before accepting audit, auditor shall see whether preconditions are present. What are preconditions? Number one, determine whether FRF is acceptable. They will prepare financial statement, but FRF is acceptable. Example, your wife will tell, I will prepare non-veg food. Not acceptable. You want veg only. Your family is Brahmin. Since years you are having veg. So number one, determine whether FRF is acceptable. Number two, obtain agreement and acknowledgement from management that it understands and acknowledges its responsibility for. It has three responsibility. Obtain agreement from management, it acknowledges and understand its responsibility for. Number one, preparing financial statement, how as per acceptable FRF. Two, for internal control as management considers necessary. Have you put in proper controls to ensure financial statement are free from material misstatement? Third, to provide auditor with all information, additional information, unrestricted access to people within the entity. You will give us all information, all additional information, and unrestricted access to people. I can ask CEO, CFO, anyone. If you are agreeing, only then I will accept the audit. If you say any of the condition, I don't agree, I will not accept the audit. Clear? So tell me, before accepting audit, auditor will evaluate whether preconditions for audit are present. Number one, okay. Number one precondition is determine whether FRF is acceptable. Second, it is acceptable. Okay, Schedule 3. Okay, they will prepare financial statement as per Schedule 3. I will audit as per Schedule 3. Obtain agreement from management. It acknowledges and understands its responsibility for 1, 2, 3. Number one, preparing financial statement as per FRF. I will only audit, not prepare. Two, for internal control as management considers necessary. Three, to provide auditor with all information, additional information, unrestricted access to people within the entity. If this is acceptable, only then audit will start. I hope clear. One last time. 1, 2, 3, start. In order to see whether preconditions for audit are present, auditor shall determine whether FRF is acceptable. 2. Obtain agreement from management. It acknowledges and understands its responsibility for. Number 1. For preparation of financial statement as per FRF. Number two, for internal control as management considers necessary. Okay. Why internal control? To ensure financial statement are free from material misstatement, to provide auditor with all information, additional information, unrestricted access to people within the entity. Learn this. I hope you understood. Very easy. Super easy. Chalo, done. 1, 2, 3. What are preconditions for audit? Number one, determine whether FRF is acceptable. Obtain agreement from management. It acknowledges and understands its responsibility. What are three responsibilities of management? Number one, for preparation of financial statement as per FRF. Two, for internal control as management considers necessary. Three, okay, to provide auditor with all information, additional information, unrestricted access to people within the entity. Come here, come here, come here. Now all is very time pass. Tell me. Then engagement letter. Tell me what should be content of engagement letter. That question can come. We will easily learn. Auditor shall agree terms of engagement with management or those charged with governance as appropriate. See, in some cases management will be there. Some cases, what is TCWG? Those who don't know. See, Tata has several company. Tata Steel, Tata Motors, Tetley, Tanishq. Now there is separate management for all this. CEO is separate, management separate. But there are common Tata Group board of directors. Not Tata Steel, Tata Motor, Tata Sun. Okay. Tata Group board of directors. Those are known as TCWG, those charged with governance. They basically give direction to the company, vision, mission, goal, objective. Are you clear? Those are responsible for overseeing everything is proper. So depends. In some company, auditor will agree terms, talk with management. Some company TCWG, it will come in detail later. Auditor will agree with terms with management or TCWG as appropriate. Engagement letter is sent by whom? Tell me. Auditor will prepare, MCQ will come and send it to the client. It should be in writing. It should be in writing. Okay. So one more time. Auditor shall agree terms of engagement with management or TCWG. He will prepare engagement letter and give to whom? Client. It should be in writing. Now, what are content of engagement letter? Step 1, understand. Step 2, learn. Even more time pass. Objective and scope of audit of financial statement. What do you write in engagement letter? What's the objective and scope of doing audit, which we just studied? Second, what are responsibility of auditor? What are responsibility of management? Okay. Inside part we don't have, only name. Identification of FRF for preparation of financial statement. Financial statement will be prepared as per which FRF? Okay. Schedule 3, Banking Act, Insurance Act. Identification of FRF for preparation of financial statement. Third, reference to the expected form and content of auditor's report and circumstance in which form and content may change. Listen last point nicely. Form means what will be the format and content of audit report, how the report will be prepared, okay, and circumstance in which it may change. Normally it will be normal report only, unqualified. Whatever is format is given in SS 700. This will be the format, this will be the content. But if I find mistake, if I give qualified disclaimer adverse report, format and content will change, which we will study in chapter 8. Form and content of report to be issued, circumstance in which form and content may change. I hope it is clear. Over. Tell me. Content of engagement letter in 1 second, learning over. Objective and scope of audit of financial statement. Responsibility of auditor. Responsibility of management. Identification of FRF for preparation of financial statement. Reference to expected form and content of auditor's report and circumstance in which form and content may change. Easy, easy, easy. No, super duper easy. Learn. Small break of 5 seconds. Done. Tell me, engagement letter is prepared by auditor, given to the client. In this, both terms and conditions are clear. Okay, it should be in writing. So tomorrow there is no confusion. What are content of engagement letter? Please tell us. Objective and scope of audit of financial statement. Responsibility of auditor. Responsibility of management. Identification of FRF for preparation of financial statement. Reference to the expected form and content of auditor's report and circumstance in which form and content may change. Over. Almost over. God knows it took 10 minutes also or what. Recurring audit. Definitely very easy question. Tell me, if it's the same client, I am doing audit of Reliance since 20 years. Do I need to send engagement letter every year? Every year I will tell to Reliance, this is your responsibility, this is my responsibility, these are our every year. No, but in certain circumstances, yes. Listen nicely. Recurring means same client. Auditor will not decide to send engagement letter each year. However, in following condition, he may feel necessary to send engagement letter. What are recurring audit? If same client is there, do I need to send engagement letter every year? No, no, no. But in certain conditions, yes. You just have to remember conditions. What are the conditions in which, in spite of recurring audit, we need to send engagement letter? Over. Number one, any indication entity has misunderstood objective and scope of audit. If they are not cooperating, okay, then send engagement letter next year. Sir, I think you have misunderstood. Our objective is to get reasonable assurance. You don't give data only. Sir, but why engagement letter? Just to remind you. Sir, this is our scope of audit. Any indication entity has misunderstood objective and scope. Any revised or special terms of audit engagement, your fees will increase. Send a letter. Sir, these are special terms. Fees has to increase by 20% this year. We had decided. Change in senior management. Tell to senior management, hey, your dad is here. Change in owner. New owners also have to be told, we are auditor. Cooperate with us. Change in nature or size of business. Your business has increased 4 times. So our audit, more days are required. I will not do for free. My fees will increase. Change in nature or size of business. Very good. Changes in legal requirement. From schedule, from Companies Act 1956, Companies Act 2013 came. 100 new responsibilities are there. Fees increase. Changes in FRF. Earlier Schedule 6. Now revised Schedule 6. Now Schedule 3. Baby. FRF change. Changes in other reporting requirement. For your company, Caro also applicable. Extra fees. Okay. Any other reporting. Companies Act. We have to report also on internal financial control. Extra fees. Nothing free we have to do. Understood. Tell me. Recurring audit. Despite the same client, do we need to send engagement letter? No. But in following condition, we need to send. Just remember 2 minutes over. Okay. Any indication entity has misunderstood objective and scope of audit. Any revised or special terms of audit engagement. Remember 2 points. Done. Now 3 points. Change in senior management, change in ownership, change in nature or size of company's business. One more time. Change in senior management, change in ownership, change in nature or size of company's business. Done. Last. Changes in legal requirement, changes in other reporting requirement, changes in FRF. Changes in legal requirement, changes in FRF, changes in other reporting requirement. Over. Changes in legal requirement, changes in FRF, changes in other reporting requirement. Super duper easy. Over. Baby. Then concentrate. Concentrate. Here. Auditor may decide not to send engagement letter every year, but in following cases we need to send. Any indication entity has misunderstood objective and scope of audit. Any revised or special terms of audit engagement. Change in senior management, change in ownership, change in nature or size of company's business. Last three, changes in legal or regulatory requirement, changes in FRF, changes in other reporting requirement. Oh my God, over in 2 minutes. Limitation. If anyone puts limitation prior to accepting audit, you are going for engagement letter or engagement letter is signed, whatever. Okay, you just reach there. Sir, you can check everything, but don't go to our Erode factory. Erode, Coimbatore, Erode. Why? They're not required. Immaterial. Sir, how you can decide immaterial? I want to go. I have to go. Are you not understanding? I have to go. Erode, don't go. And from first day, if he is putting limitation, then don't accept. If you feel there is limitation on the scope of audit, he is not letting you check few areas, okay? Debtor, creditor, auditor, anything, okay? If there is any limitation such that it will result in disclaimer opinion, you feel disclaimer report will come, don't do such a audit. Don't accept the audit. If management or TCWG put limitation on the scope such that we feel we will have to give disclaimer report prior to accepting auditor shall not accept such limited engagement unless required by law to do so. Okay, if law tells accept, otherwise okay. Very simple one line. If anyone has put limitation on the scope prior to accepting audit such that you feel it will result in disclaimer opinion, don't accept such a engagement. Over. Last question. Sir, sometimes you are told to change the engagement. For example, you are given which work? Statutory audit. Our entire book is written from stat audit perspective. That is the audit compulsory required as per law at the end of the year. From stat audit, you are given internal audit or you are given accounting work. Why, sir? Why? Reason could be anything. Let us talk about 2-3 reasons. Maybe you misunderstood that you got statutory audit work. Maybe, okay, you did not listen properly. Maybe you did not know how to do the work. Maybe you were not experienced in that particular field. Okay, for example, you had to audit a fertilizer company. You don't know what fertilizer much. So any reason could be there. Okay, change in engagement to a lower level of engagement. What is a lower level? Simple. From stat audit, you got internal audit. From stat audit, you got accounting work. Anything can be lower level. Listen nicely. Auditor before completion of engagement is required to change the engagement. Okay. So now we have to divide it into two parts. Change can be due to several reasons. Scope of audit misunderstood, nature of service misunderstood, you could not work properly. Divide into two parts. Is there reasonable justification or no reasonable justification? Now this is a judgmental decision, okay? Is it reasonably justified? Many times you don't understand the audit, okay? They were very true. You could not understand only how to check. You did not have staff, whatever reason, not given in book. If there is reasonable justification to change engagement, then what we will do? Prepare new engagement letter, issue the report as per new terms and conditions. Don't give any reference to original engagement or work done under original engagement to avoid confusion. Simple. You have changed the, did you agree? There is reasonable justification. Prepare new engagement letter. That now we will do accounting work, we will do internal audit, issue the report. Don't give any reference to original engagement or work done under original engagement to avoid confusion. Very simple. Whenever you have new girlfriend, don't give reference that earlier girlfriend was like this, she was so very much loving, you don't care much. She will also go. Crazy you are. Why are you giving reference to old girlfriend? Understood. But if there is no reasonable justification, I am removing lot of queries. This is wrong, this is wrong, this is wrong, this is wrong. Qualified report. Then get out, get out. Okay. If there is no justification, then auditor should not agree to lower level of engagement. And I will request management, I want to continue assignment. Management doesn't agree. I will tell PCWG, I want to continue engagement. There is no justification for giving lower level of work. Okay. If not permitted by management, you cannot force, then withdraw from the engagement. If even after requesting management TCWG, not withdraw from the engagement and report to whom? Very simple. Regulator, management, owner, TCWG, write everyone name. Report to owner, regulator, TCWG. Over. One last time. If there is no reasonable justification, then we'll request management to continue engagement. If they don't agree, I will talk to TCWG. I want to continue engagement. If they don't agree, withdraw from the audit, okay? If possible, under law, and report to the people, owner, management, regulator, TCWG. Why regulator? They come to know in this company fraud could be there. They are not letting auditor continue. So next time auditor comes, they will take extra care. Regulator, SEBI. Over. Oh my God. Over. With this entire essay 210 also over. Agreeing the terms of engagement. Who is agreeing? Management is agreeing with TCWG. Auditor prepare. Both are signing. Both are agreeing. With this, our very good day today is over. Okay. Target fully achieved. Now tomorrow we will come with two chapters. Chapter 2 is hardly 1.5 to 2 hours. Chapter number 6 is half an hour. So tomorrow also small will finish two chapters. Okay. Bye bye. Good night. Sweet dreams. See you. Tomorrow's lecture is also on YouTube, and thereafter we will shift. Okay. Thank you. Bye bye. Take care.